You have held in there as a bull throughout. I saw you working Twitter over the weekend, telling people not only to hold, but maybe Black Friday really was a Black Friday in terms of buying opportunity for folks. At the same time, people always thought this was supposed to be an inflation hedge and not correlated, and yet it seems to be. So I want to get your thoughts.
Yeah, thanks for having me back, guys. Andrew, before I came on, I was actually thinking, I think you and I started talking about Bitcoin. It was down around $3,000. And, we've kind of seen all this massive fluctuations in prices. So it's kind of crazy to look back over the last 3 years. But I think really what people need to understand here is this year, just in 2021, there's already been 6 drawdowns now of over 20%, one drawdown over 50%, one drawdown over 30%. This is obviously a volatile asset compared to legacy assets. Now, if you look at the historical volatility, a 12% drawdown in Bitcoin is equivalent to about a 1.7% drawdown in the S&P 500. So having a 24% drawdown in Bitcoin is equivalent of about 3.5% in the S&P. And so it's kind of par for the course, if you will. Now, the other point that I think is really important to understand is that Bitcoin is really the only last remaining free market. It really is the honest market, many people would describe it. And what you saw was Bitcoin sold off before the equity markets or others. And so what we're watching is a free market that trades 24/7, 365 by millions of people globally. And it serves as kind of a price indicator for how people are feeling about certain financial assets or markets.
Anthony, let's talk about some of the technicals, though. There seems to be some kind of, I don't know if it's a floor or resistance right around 53,000. That's been the sort of mark thus far. Curious how you think about that floor, if that is a floor, and also what you think about, dare I say, a ceiling in terms of directionally where we are now. There was a bit of bearishness, as you know, over the last week, even beyond the variant.
Yeah. So I think that there's a couple of different ways to look at, floor prices or kind of what is that lower band. One of the big things to keep watching is the realized price of Bitcoin. Basically, when a Bitcoin trades hands, what was the price last that traded hands at? That's still down around $20,000 or so. And if you look at how many people hold Bitcoin are in profit, right? So basically, wherever they bought Bitcoin, what that price was compared to now, it's about 89–90% of people are in profit. So we still got quite a bit of an error of margin, if you will, on the downside. Now, I still think, though, you've got a finite asset that the world is still waking up to and understanding that while we have undisciplined monetary and fiscal policy, I'm not selling my Bitcoin. There's millions of other people who aren't selling their Bitcoin, and demand continues to increase. Right. We just saw this morning that Invesco is going to launch an ETP with spot Bitcoin. And I think you're going to continue to see products like that come to market. Demand increases. You have a fixed supply asset. The U.S. dollar price has to move up over time to accommodate everyone.
How do you think about the price of Bitcoin in relation to Ether, Solana, everything else that's out there right now? Because we did see even bigger moves in those other cryptos.
Yeah, I think that Bitcoin by far is still the king. When it moves, everything else kind of moves with it. If Bitcoin goes down, other things tend to move down. That is changing a little bit, but I think it's still true for the most part. And ultimately, what you see is some rotation going on. So sometimes you'll see Bitcoin move up, and then people will move into some of the other cryptocurrencies. Then they'll come back into Bitcoin. I think the big things to remember are there's still market structure that's at play here, right? Large caps are going to be less volatile than small caps in bull markets and in bear markets. And so I think that as people look to push out on the risk curve during a bull market, they kind of always come back to those less volatile assets in the bear market.